the experts in this field is Dr. Abtahi. It's an honor to have Dr. Abtahi as one of the members of the board of directors, as well as having him for our community here in Southern California. So we share something together. Both of us spent some time at MIT. That's an inside joke for those of you who were in Boston, greater Boston, actually in Cambridge. For some unknown reason, he decided to go from upper zip code to a lower zip code. So he got his bachelor degree in electrical engineering at MIT, and then he decided to go to Harvard, the rival to MIT, to do his MBA, Master of Business Administration, and later on his doctorate in Business Administration from Harvard, unfortunately. I don't know why he decided to do that, but that's okay. We can have an agreement on that. That's a good school too, as we know. Not as good as the other one, but it's a good school, as you know. So Dr. Abtahi has been very active in this field. And today, particularly with the economical issue that our country is facing, after 8 years of brilliant administration that we had in our homeland. So Dr. Abtahi today is going to talk about monetary issues and monetary policies in Iran. As I mentioned to you, it's really an honor to have him as a speaker and also as a member of Andishgah. So please join me to welcome Dr. Abtahi for delivering his speech. Thank you so much.
Thank you. Thank you. Thank you. Thank you so much for everybody coming on this Sunday afternoon. And thank you, Ali John, for a kind introduction. Today's topic is first of a number of lecture series that Andishgah will bring to our community about economic and financial issues in Iran. And since mine is the first one, I have two goals to achieve. One is to talk about the subject, the role of central bank and monetary policy in Iran. The second one is that to lay out some of the concepts and foundations that will be later on delved into in detail by following lectures. So bear with me when I occasionally digress to talk about a certain subject. It is only for the reason to lay out the framework that we will follow in months to come. With that, let me start my talk. I will be talking briefly about an introduction, then I quickly talk about Iran's economic situation, and then we'll delve into central bank and monetary policy, and after that, specifically, I will talk about the governance of central banks, specifically in Bank Markazi, and what is required. And after that, with the recommendation, obviously, I will talk about the inflation and monetary policy in Iran, which is a topical issue as we are all aware of. And I will also talk about the causes of the so-called chronic inflation in Iran, which is a social ill that Iranians are facing. And last, I will provide a framework for analyzing Iran's financial health, and I will end it with the following question: is there any hope? So let's start at the highest level. And what is a society and what is an economy? It's a very simple question, but it's a very important one to ask. A society is nothing but a human society is a group of people that are involved with each other through various activities. It's a society. One of those activities is economics. And therefore, an economic system consists of production, distribution, trade, consumption of limited goods and services by different agents in a given geographical location. So that's a society. This is the economic sphere. The most important thing that we need to recognize is that I've said, by the way, man's requirement. My due apology to ladies. I could have said person's requirement, but it doesn't sound well. Effectively, transformation of society requires an acknowledgement of man's requirement in three interrelated spheres of activities, and those are economic, political, and social. There's a fourth element, which is it's called spiritual, and I will not get into that subject today. In that framework, economic development is more than just a rise in GNP per capita. Material advancement should expand people's entitlement, self-esteem, capability, and freedom. If you have that, then you have economic development. If not, then obviously you're underdeveloped. So what is an economy? There's always a problem when you simplify something, because either you don't understand it or you don't care about it. Economies are not a simple, static, linear, predictable organization. As a matter of fact, they are complex, dynamic, non-linear, and stochastic. And if you look at it, understanding economic issues truly requires one draws a framework and analysis from other fields such as psychology, sociology, anthropology, history, and lately neuroscience. The reason why I say this is that, as you will see, that the previous administration looks at an economy in such a simple manner that will only can create crisis. And I must add also that economics is not a science, but it can draw a lot of analogy from it. And this is a topic between the economists and some members of the science community. So let's look at this. I call it Mr. Ahmadinejad's view, because when you have an ideology, in this case a very populistic view of the economy, you will see things that are basically compartmentalized, and no feedback. They are linear, non-stochastic knowledge. In English, what that means that if you're at point A and you want to lead your country to point B, in an ideological-based framework, you see things very simple. We want to go to point B, we'll tell the banks to lend to industry, and that's the end of the story. There is no room for uncertainty. There's no room for unknown lags. There's no room for element of surprise. And that basically, that simplistic view is the same as ignoring all the development that we've had in the economic theory from 17th century, as a matter of fact. Sorry. Effective policy making, first and foremost, requires gathering data, building models, and then applying reason and rationalism. Gathering data, building model, applying reasons and rationalism. And as you're all aware of, especially during the last 8 years, there's not been room for any reasoning. It's all ideology. It's all ideology. So, economic models are effectively a subjective approximation of reality. The most important part of that analysis is that the very process of constructing, testing, debating, revising models forces the policymakers to crystallize their thoughts, to understand the subjects in detail. And that, in turn, promotes rational and constructive debate over what drives economic behavior and what should be done to address them. That's the way one should look at an economic system. Let's give you a couple of examples in terms of Iran. Iran's Center of Statistics, Sazman Amar, in August 2013, announced that the growth rate of Iran last year was negative 5.4%. The same organization, a few months before that, said that number is only 0.1, 1% negative, i.e. 1/5 of that number, from 5.4 to 1%. A huge, huge discrepancy. How can a center of statistics, I mean, it's something to say from 5.4 to 5.3 or 5.2, but if you go from 5.4 to 1%, there's fundamentally something wrong with that whole organization. Another example, in August 2010, Iran's, this time central bank, delayed announcing the growth rate for the year 2008. The reason for that was that that number was 0.5%, and that number was in contradiction. As a matter of fact, Ahmadinejad did not like that number, so they held that number for 2 years. They didn't publish it. So we have a situation. Remember I said we need models, we need data and all that? We have a situation in Iran that we have inaccurate data, inaccurate models, and you put them together, you get wrong execution. And when you do wrong execution over and over time, you get crisis, which is exactly what we have right now. Now, what are the pillars of an economy? What is it that we actually need to build a society, or civil society in this case? You see, we have players in an economy: households, firms, and governments, the three main segments. There's millions of them. They interact together. By interactions, they have economic interactions, and we measure those activities by economic variables. But that whole economic activity is built on foundation that we call it infrastructure and institution. And the most important foundation and infrastructure is the judiciary system, right here. By judiciary system, I mean we need to have a system that is independent, that it has impartial courts, it protects the rights of property, it has integrity of legal system, enforcement of contract, and reliability of police. Those are the main elements of having a judiciary system as your foundation. If you don't have that, you don't have an economy. If you don't have that, you don't have a civilized society. That is the foundation. Because every economic activity, no matter what you do, if you do a transaction, in an economic transaction, implicitly or explicitly, underpinning of that is some sort of a contract. And that contract has to be respected by an organization, and that is a judiciary system. I talked about the institution that we also need to build an economy. There are many, many institutions that one can think of, but there are 4 that are common to all the institutions you run into in developing countries. Number 1 is what we call market-creating institutions. These are the institutions that deal with property rights and legally binding contract. Second one are market-regulating institutions. These are regulatory institutions. Third institutions are market-stabilizing institutions. These are institutions for macroeconomic stability, i.e. central bank is one of them. And the fourth one is market-legitimizing institution. These are institutions for conflict management. These 4 elements of institution is a must if an economy is to prosper. Once you have those institutions, these institutions will enforce property rights and the rule of law. They provide individuals with the incentive to save, invest, and take risks. Taking risks is one of the most important things in any economic development. You need entrepreneurs to take risks. If you don't have the entrepreneurs to take risks in nowadays, you will fall behind the other societies. The institutions also prevent those in power to expropriate the resources for their own benefit, which is exactly what is happening in Iran right now. And finally, if these institutions work properly, they provide equal opportunity for all. So institution and infrastructure are the key for building a prosperous economy. And last, we need one more thing to get the system going, and that is the notion of trust. You need to have trust in the system, trust in politicians, trust in financial system, trust in business leaders, trust in judicial system, trust in media, trust in bankers. You need to have all of that for the system to work. As a matter of fact, in this country in 2008, if you recall the crisis, one of the topics that was talked about over and over was the lack of trust that people had in the system. And that's also an important element of that. So let's talk about Iran's economy. And I'm going to show you a very confusing slide, purposely. It's not that confusing, and I'll tell you why. First of all, the role of government is not to take the place of the marketplace. It has to be a facilitator. If you recall, a few slides before, I talked about 3 spheres of activity: political, economic, social. Now look what's happening in Iran. You will see the government intervening and interfering in every one of those spheres. In the political arena, they run the state and local governments. They support all kinds of charities. In the economic arena, they set the prices and wages. They determine the dividends or the interest rate that banks are supposed to pay, or the rate of return that the banks are supposed to earn. They determine exchange rate. They determine business. And in the social arena, the government decides what to wear, what to drink, what to publish, what to write, and how to socialize. So the government's hands is in everywhere. If the famous philosopher Hobbes was alive, this is Leviathan that he referred to, that governments interfering everywhere. 85% of today's economic activity is run by the government, 85%. So in this environment, how can anybody provide a market-based solution to the current government? You can't. 85% is government-owned. Unless you dismantle all of that, you're not going to be able to have any market-based solution for this economy. Give you a couple of statistics. The government budget during 2010, for 10 years, it went up by a factor of 10 times. Government employees since the revolution has gone up by a factor of 4 times. To give you a comparison with our neighboring country, we have the same population as Turkey. The number of government employees in Iran is more than 4 times than Turkey. So government is everywhere. Now, what has this government done for our society effectively? Nothing but misguided economic policies. Mr. Ahmadinejad's projects, one after the other, was a failure. And I'll give you 3 examples here, and later on I will delve into one of them. The first one is the subsidized residential loans. These are loans with the low interest rates. You had the famous targeted subsidies, and then his other projects were loan for quick return projects. These projects and others like it, and also the entire misguided fiscal and monetary policy, controlling credit, the rates, the amount, who should get the credit, funding populist projects from everywhere, and supporting an overvalued currency for more than 15 years. All of that is a disregard for basic economic laws. And because of that, we have one of the worst economic conditions that we call it stagflation. Stagflation is one of those diseases that you have both inflation and unemployment together at the same time. It happens very, very rarely. It happens in this country back in early 70s. And the question again that is to ask is that why is it that a country that has had $800 billion of revenue in the last 8 years, the best that they could do, has given us the worst economic disease? I mean, that takes a lot of ingenuity, actually. And here's how it happens. Very simple. Ministry of Petroleum, on top here, they finalize and sign contract and they sell oil and gas. And the country gets oil revenue. The dollar comes to the government. Government gives the dollar to Bank Markazi. Bank Markazi gives him the rial. Then the government takes the rial and implements his populist projects. And as he spends, as the government spends, the banking system reserves go up, And when the banking reserve goes up, we have a money multiplier that basically for every dollar, the money supply could go up by a factor of 3. So that will lead to increased liquidity, and increased liquidity will give you inflation. Now, if that was the case and it ended right here, fine. You had a lot of oil revenue, you have inflation. But in Iran, something else happens. When you have a lot of inflation and you let the country's door open and you start importing goods and services from China and everywhere in the world, you have higher import. Well, higher import means your domestic manufacturers are going to go out of business. And when they go out of business, you have unemployment. So lo and behold, you have unemployment and you have inflation. And we call that stagflation. This is how this stagflation has occurred in Iran. And the problem with stagflation is that there is no unique or global solution for it. And I'll tell you why. Very simple. Because stagflation, you have inflation and recession. Let's say solution number 1, you want to resolve the inflation part of that stagflation. To do that, you have to go basically have a contractionary fiscal and monetary policy. You put the brakes on. But if you do that, if you put the brakes on, you will increase the unemployment. But you already have unemployment, so you're going to have unemployment even worse. If you go to solution number 2 and say, well, I'm going to resolve the unemployment. Well, to do that, then you have to have an expansionary monetary and fiscal policy. If you have an expansionary monetary policy, you're going to increase the inflation. But you already have inflation, and you're going to have the inflation worse than before. That is why stagflation is very difficult to resolve, and it takes years to come out of it. I'll give you some statistics that shows some of the problems that we have right now. These are the debt of various entities, and 2 rows are worth watching. The one on the top is the government entity's debt to Bank Markazi. It has gone up by a factor of 10 times during Ahmadinejad's administration. Government entity debt to Bank Markazi by 10 times. Drop down, the government itself debt to banks have gone up by a factor of 15 times during Ahmadinejad. Basically, the Central Bank of Iran, Bank Markazi, during his administration is nothing but a printing press. Printing press. Announce populist project, call up the head of central bank and get the loan, either through state-run banks or other banks, increase the liquidity, and lo and behold, you end up with that crisis. Another telling statistics here, if you look at the loans, the outstanding loan, the percentage of overdue loans of the Iranian bank is 22% of total asset. Just to give you a perspective on that, that number is normally 3 to 5%. And I've given you some example on the right-hand side, some countries with high rates. The one that's highest is Lebanon, 10.4. But normally you have 3 to 4%. So that means all these loans that they have been given out, they were given out to friends and family and never paid back. Iranian banks are capitalized today at $20 billion, but the overdue loans is $34 billion. So for all practical purposes, Iranian banks, at least on paper, they're bankrupt. And there's no mechanism, by the way, to follow up and to get this money back from these borrowers, because they have used that money for foreign exchange trade, real estate investments, capital outflow. As a matter of fact, in many cases, I'm told that the recipient of a loan was just an intermediary for passing the loan to somebody else. So you can only imagine that a commercial banker in this country doesn't do any due diligence who he's lending to. Nothing like that. The graph here also shows, again, the public sectors have gone up, but the one I want to talk about here is that the Ahmadinejad administration assumed the budget for fiscal 2013 based on oil price of $140 per barrel. That is a pretty dumb assumption. The The budget deficit for that reason is estimated to be this year $35 billion. And the present administration of Mr. Rouhani has stated that they're not going to hold back in any of those projects like the targeted subsidy, i.e. they're not going to put the brake on. So they're going to go for the deficit. So we're going to have another $35 billion of loans that they have to borrow from somewhere. They cannot borrow it from outside. It has to be borrowed from that internally, which means printing the press, more money and more liquidity. So in a nutshell, what we have in Iran is referred to financial repression. Financial repression in the economic parlance means when a government controls everything. They control the ceilings on your deposit rates, they control the amount of money you can borrow, they can control on the reserve requirements. Basically, their hands are everywhere. When you have a financial repression, it will always lead to an inflation. And we should not be surprised that we have an inflation in Iran right now. Because if you want to get rid of the debt that the government has, they have 4 solutions. They can either hope to grow, they can restructure, default, or inflate. Well, growth in Iran, good luck. There's not going to be growth for a while. Restructuring is totally impractical. How are you going to restructure the government debt in Iran? Obviously, they cannot default either, so they're left with one solution, inflate, i.e. inflation is going to go up. That's how you're going to pay back some of your loan. And as we all have known, that the liquidity during his administrations have gone up by a factor of 7. As a matter of fact, from Ahmad Shah Qajar to Ahmadinejad, liquidity was 70,000 million tumans. But from the beginning of Ahmadinejad to the end of it, he went by a factor of 8 to 500. So from Ahmad Shah to Ahmadinejad, 70,000, and after that it went up by a factor of 7 times. Yeah. And one of the graphs that I wish somebody could show to Mr. Ahmadinejad, I don't want to pick on him, but well, I pick on him because he's responsible for it. Look at this graph here on the top. It shows the growth of Iran's in the last 15, 20 years. But look at this last 4 or 5 years that the growths have gone down. This is exactly happened when the liquidity went up. Ahmadinejad believed that if you increase the liquidity, the growth rate will go up. But he forgot the first basic principle of economics, which is this little equation here that says M times V is equal to P times Q, which is if you take the money supply and you multiply by velocity of the money, the velocity is the number of times the money turns over, that's equal to the national output. Every freshman in economics knows that. It's a simple equation. What that means, therefore, M is going to impact P. You increase M, and if you don't do anything else, inflation will go up. You increase the liquidity, inflation goes up, the growth will go down. It's as simple as that. He did not even pick on that. Or maybe he knew about it, I have no idea. But that just shows what has happened to growth rate. Iran has many fault lines, and there are a number of papers that have come out recently to talk about Iranian fault line, and I'll give you some of them here. Iranian banking system, which is the subject of today's discussion to some extent, has the lowest score in MENA. Its capital adequacy is dropping by the day. Banks are lending mainly to the government. Inability to raise capital from local banks coupled with increased rigidity suggests that the non-oil economy will find it difficult to adapt, amplifying the effect of economic sanction. What that means is that the hard-working industrialists in Iran, that they have 200, 150, 500 people, and they are producing, they cannot get one iota of loan from the bank where there are billions and billions of loans are given to the government and to the Aghazada.
What is
Middle East, North Africa. So we have the lowest score in the Middle East, North Africa. And obviously we have one of the highest corruption and the rule of law in Iran. In terms of human capital, educated human capital has migrated from abroad. Ali is one of them. But Iran has a relatively good education, including the tertiary education. But to take those educated people, put them into the business, you need training. And we don't have that mechanism. That's why our business condition is always ranked one of the lowest. There is no mechanism to train educated Iranian from the Bachelor's of Science or Master of Science into a business environment. The other one that we have, which is a dangerous one, is we have a low perceived deprivation. This is what we call the reality expectation gap, especially with respect to social services. It is what you expect from the government and what you get. The wider that it gets, the more dangerous. And in most countries, when it gets beyond a certain level, that is a precursor to social unrest. And last, we have the least energy efficient economies, even worse than all the other members of OPEC. It is amazing. Least efficient, energy efficient. The business environment, there's a lot of discussion today in the local paper in Iran today. They talk about how we can enhance the business condition, i.e. kasb o kar, how we can develop it. Well, in order to have a conducive business environment, you need at least 4 or 5 things. Number one, you need a stable domestic and foreign political environment. We don't have that. Number two, people respect and trust for the rule of law. We don't have that on either. Access to capital, good luck. The impartiality of judicial system, again, good luck. And the total transparency on the part of government to tell you anything, good luck. So there is no conducive environment for business, no matter how they talk about it. So when Mr. Rouhani came to power, everybody's been giving him recommendation about what to do, what not to do, and there's a whole host of goals. And normally the governments, like corporations, when the new administrations come into play, they tempt to do a lot of things at the same time. They want to have 5, 6, 7 goals. But that's dangerous because if you're not focusing on anything, you're not going to achieve anything. Normally, you can have 2 goals. And one of the ways to select these goals is by this simple 2x2 matrix. Here's what I mean. Let's look at the issues from low urgency to high urgency, i.e. some goals has low urgency, some of them have high urgency. And then on the vertical axis, ask the questions, how important is that goal? So we're looking at it in terms of importance and urgency. And we put these different goals into this matrix. The most important one is this part. I call it critical. You want to go and allocate your resource and energy to those issues that are highly important, but also highly urgent. Highly important, highly urgent. Forget about the others. And in my analysis, I think the 2 things that they can focus, according to this, is inflation and improving business environment. If Rouhani does these 2 things first in the first year, I think he's on the right track. Otherwise, I don't think he will be successful. So, central banks. Central banks, the history of money, it goes way back almost 2,000 years ago, and as usual, Chinese had invented everything. So we don't need to worry about that one. But in the last 4 centuries, there's been some very interesting development in the history of money and central banking. The human society have gone from using precious metals, like golds and silvers and things like that, to private issuers of currency, which I will talk about it, to what is today, we call it fiat money. Let's talk about specifically the country that we live in the US. In the US, between 1837 and 1866, almost 30 years, we call that a free banking era. Almost anyone could issue paper money. It's very simple in those days. You have a business, you issue paper. If somebody trusts you, and a bunch of people trust you, that becomes a currency because they trust you. In that era, as a matter of fact, there were 8,000 different monies in the United States in that 30 years. And these monies that were private issuers were issued by states, municipalities, private banks, railroads, construction companies, and of course churches and individuals. So we had 8,000 different private issuers. And the result was crisis after crisis. And it culminated into 1913 when the Federal Reserve was created because of the substantial crisis that the US had in 1907. So, you know, in a nutshell, at the 10,000 feet level discussion, the money has gone from precious metal to private issuers to fiat money. And fiat money today is basically the notes that you have in your pocket, which could be also digital as well. When we went from precious metal to fiat money, something occurred. And that was, well, if I'm using this piece of paper and I call it $100, $10, somebody has to guarantee its purchasing power. Because this is not a gold, it's not a silver that has inherent value. Somebody has to effectively maintain the purchasing power of that currency. And that became one of the most important responsibility of central banks, to maintain a low and stable inflation in order for the society to be able to transact. Just a couple of statistics. The central banks, as we know it today, it's really a 20th century phenomenon. As a matter of fact, most of the central banks was established in the second half of last century, from 1950 onward. And their responsibility and goals are very generic for many cases. Responsibility of central banks, they control the availability of money and credit. They are the lender of the last resort. They can supervise commercial banks, and they manage the payment system between banks. And the goals are effectively low and stable inflation, stable growth with low unemployment, stable financial market, and then exchange rate stability. Central banks, throughout their history, have caused many, many problems. They have created inflation, hyperinflation, deflation, depression, currency crisis, all of them. So it's not that the central bank from day one they've done a great job. As a matter of fact, one of the main reason we've had the depression in 1929, 33 was because of the Federal Reserve of wrong policy. But throughout time, as they've learned from their mistakes, now they're getting better and better in managing what they're supposed to do. So from central bank to monetary policy, what we mean by monetary policy is nothing but basically managing money and credit. And the best way to achieve monetary policy is to keep inflation low, stable, and predictable. Once you do that, then you give confidence to everybody, businesses and the government and individuals, to make sound and economic decisions. In order to effectively manage a monetary policy, you need at the helm of central bank people that are experienced, high integrity, they're respectable, independent mind. Because the most important thing that a central bank can have and should have is credibility. And you need those qualifications for the credibility. The component of monetary policy is very simple. You have tools, you have targets, you have goals. Tools are open market operation, discount loan, reserve requirement. Targets can be inflation, money supply, and goals are low inflation, high employment. Let me give you don't worry about this. Let me give you an example by driving. If you're driving a car and you want to go from point A to point B is your goal. You want to go to point B. When you then decide to go faster, you put the pedal, push the pedal down. That is your tool, pressing the pedal down. But then you also want to monitor, how am I doing? The speedometer is your target. So a speedometer is the target, tool is the gas pedal, and goal is where you want to go. So central banks have tools and they have targets to monitor their operation in order to get to their goals. And therefore, they have what we call transmission mechanism, i.e., when you implement your monetary policy, you're sending those policy through certain transmission, in this case, credit transmission, interest rate transmission, in order to get to the output. The reason why I'm going through this, because in the literature, a lot of people get confused between tools and goals and all the other terminology. There are three key goals of any modern monetary policy. The first one is price stability, which is low and stable inflation. Second one is stable real economy, and the third one is financial stability. And in financial stability, we have two components, micro-prudential and macro-prudential. Let me explain that, because that's a very important one. When we have a micro-prudential regulation, means you go to a bank, you look at their assets, you look at their liability, you look at their riskiness, and you say, okay, you're fine. But if you do that for every bank, that does not mean that the whole banking system is okay. This is what we call the paradox of aggregation. To give you an example, if you're in a baseball stadium, and if you want to see the play well, if one person gets up, he can see the play pretty well. But if everybody else gets up, nobody sees anything. Or an example in economic sense, if one person saves, at the end of the year, he's a rich man because he saves his money. But if everybody else saved, well, everybody's going to be poor because nobody's spending anymore. This is called the paradox of aggregation. What that means that a central bank should have a panoramic view of the banking system to see if there are systemic exposure to real estate, to market liquidity, in order to prevent those. And that, by the way, was one of the reasons this became popular after the 2008 crisis, where the central bank had totally missed the macro-prudential risk. Let me go to the next one also. When we implement a monetary policy, it's actually very, very simple. If you look at the balance sheet of a central bank, just look at on the liability side. In the liability of any central bank, it's the currency that we all have, we carry, plus the bank reserve requirement at the central bank. This is called base money, C plus R. Any monetary policy that any central bank does effectively changes this base money. And through that base money, it will work through money supply and interest rates and so forth and so on. But the key here is that monetary policy normally and most of the time works on the liability side. To have effective tools, you need tools that are, first of all, observable. Second, those tools have to be controllable. And third, it has to be related to both the goals and the tool of monetary policy. Give you an example, in Iran, the only monetary policy that we have in Iran is that direct instruction by the central bank to the banks what to charge and who to lend. That is observable. It's also controllable because they can increase and decrease the level and all that. But related, totally unrelated to economic activities. It just have no relation. So they can have an observable or controllable instrument, but have no relationship with the market. And the most important tool that you will hear over and over in a monetary policy is open market operation, which is, when the Federal Reserve comes and buys and sells the securities. That's called open market operation. And that is The reason why that's popular because it's quick, immediate, completely controlled by the central bank, flexible and easily reversible. So open market operation, which is the most important instrument of any central bank, we do not have that in Iran. Every developing country, most of them have it. We do not have it, and I'll tell you why we don't have it. Let me go to the next one. Okay, all right. Iran is, and I'm using, by the way, the word emerging and developing interchangeably. So when I call it, I mean the same thing. There are certain specific challenges for monetary policy in the developing countries. Number one is that the central banks are normally not independent. They either report to the Ministry of Finance, their political appointment, so they're not independent. The second problem with the emerging market monetary policy is that they depend on commodity or commodity export. In our case is oil. And the problem with that is that as the oil price goes up and down, your foreign exchange goes up and down, and the liquidity changes, so the central bank has to continuously adjust the liquidity. That's an additional problem that emerging markets have. And the third one is the lack of a developed financial market. Because when you don't have a developed financial market, your interest rate channels of monetary policy is ineffective. You don't have any channels effectively. And when you don't have the channel, you don't have any feedback. And if you don't have any feedback, you don't know what the hell you're doing, basically. So these are additional challenges that any emerging market may have, and in Iran, we have all of that, as I will explain momentarily. I mentioned that the central bank governance, like a corporate governance, is the ways and means an organization operates. And central bank is like any other entity, needs proper governance. Today, the structure of Bank Markazi, you have here governor and MCC. MCC is Money and Credit Council, Shorai Pul o Etebar, MCC. And then you have executive management, which is comprised of the governor and vice governor and his vice president. Currently, the president of Iran effectively hires and can fire the governor of central bank, which is very, very rare in any developing country. Therefore, it's by no means independent. More importantly, the MCC, the Money and Credit Council, which at one point was the highest authority of central bank, are comprised of the following people: Finance and Economy Minister, 2 ministers chosen by the cabinet, the head of the Chamber of Commerce, General Prosecutor, MPs. None of them, A, they're not independent because they're a political appointment, and 2, they don't have any experience. MCC members have to be independent and they have to be knowledgeable. If you don't have that, good luck. To give you again an analogy, if you look at a central bank as a government, the MCC is equivalent to legislative branch. That's where the laws are enacted and then told to the executive branch to do it. Majlis. Yes, exactly. So MCC is the highest banking policy body of Bank Markazi, and yet currently is not independent of the government. In general, the relationship between the government and the central bank evolves along in 4 areas: the appointment and dismissal of the central bank governing board, the voting power of the government, if it has any; 3rd, budgetary control of the central bank operation; and then 4th, the most important one, is limitation on central bank lending to the government. The key issue for central bank is credibility. Credibility and credibility. And credibility is actually is a social relationship as much as an economic relationship. If you have a central bank, when a central bank is credible, it becomes trustworthy. And when it is trustworthy, it can be relied upon to meet its commitment and promises. And central banks become credible when public trust them to maintain the purchasing power of their currency. In modern economy in which public cannot measure the value of money in terms of gold or silver, and money is all fiat money, credibility is the key again. Money is only a promise in today's world. If you have a $100 bill and you go to the Federal Reserve Bank, you want to change it, they give you a new $100 bill, nothing else. You're not going to get gold. In the old days, yes, but not anymore. The question is that how does a central bank gain credibility? Through 4 elements. There are 4 elements of the governance of a central bank that makes a central bank effectively credible. And these are independence, transparency, authority, accountability. And I will talk about these things momentarily. But I can tell you right off the bat, Bank Markazi governance shows deficiency in all of these 4s. They're not independent, they're not transparent, they don't have authority, and they're not accountable either. So also the thing that you have to recognize when you're constructing the governance of a central bank, all these 4 elements are interrelated because a transparency is as important an element of accountability. Accountability depends on independency. To be independent requires transparency, or authority without accountability is meaningless. So when you devise a governance for any central bank, you have to understand the interrelationship between these 4 elements. Independence, basically, it has to be an effective and successful central bank is independent, if it's independent of political pressure, number 1. Number 2, its decisions are not reversible by the government. Number 3, it makes decision by committee as opposed to one-man show. And it openly states its goals and makes clear the trade-off amongst them. And studies have shown that central banks that are more independent, they have a lower inflation rate. So independence is probably the most element of a central bank. And you can look at it in 4 different measures. Number 1, we can have goal autonomy or goal independency. When you have a goal independency, that means the Federal Reserve, in this case, if I use an example in the Federal Reserve, a central bank can effectively, on its own, decide what the goal of the country should be. Like, it should be inflation rate of 5%. That's called goal independency. Second type of independency, we call that target autonomy. Target autonomy has one clearly defined goal stated in the law, and then the central bank follows that. An example of that is European Central Bank. In its statute, it says that your goal is to maintain inflation rate at this level, and the rest is basically determined by ECB. That's called the target autonomy. Instrument autonomy, which is another type of independency, says, okay, you're not going to get to define goal independency, but once we, the government, decide what the goal is, you, the central bank, can use your instrument to do whatever it takes to get to that goal. And the 4th one is the limited autonomy, which means you don't have an autonomy, i.e. you are Bank Markazi of Iran, you have no independency. The second element is transparency. Transparency and shafafiyat is required because it will foster public trust, number 1. It reduces the uncertainty about the central bank's preferences. You know exactly what central bank stands for. People have to make decisions based on information, not speculation. So the central bank has to be transparent, and they can communicate their transparency in their annual reports, in their media, in their website, in their speeches. All of those can help transparency. Accountability, any accountability requires 2 yardsticks. Number 1, objective. What is the objective of the central bank? It has to be intermediate goals like inflation target where you can measure it. Or projection, how accurate is the central bank projection for monetary policy? Most of the time, if you have a single objective, you can have an accountability fairly well followed up. But the minute you have multiple objectives, you give the central bank excuses, because central bank can say, well, you told me to keep inflation rate this, unemployment that, growth rate that, I had multiple goals, so therefore I wasn't able to do that. That's where basically some of the problems actually lies. Also, accountability requires that who makes the decision. We want to know who actually makes that decision, who bears the final responsibility, and how transparent is their monetary policy. Recommendation for Bank Markazi, now that we've gone through through this governance. Current formation that I've already mentioned who they are on the left-hand side. On the right-hand side, MCC, Monetary Credit and Council. Each year, after approval of the government's annual budget, Bank Markazi actually presents a detailed monetary and credit policy to the MCC for approval. And afterward, the major element of that policy gets announced to the rest of the government agencies. So the MCC is actually on paper is a powerful entity. The question is that does Iran allow it to be what it's supposed to be? But today, as I said, as we speak, their member, not only they're not independent, they're also not qualified. So how can you basically make them more independent? You need obviously institutional reforms to begin with to make it credible. The institutional reform requires to enhance credibility includes the procedure for selecting the governor of Bank Markazi and its MCC members. And the criteria that you use to select them should be at least integrity, impartiality, competence, and continuity. The MCC members and the governors have to have that. If you don't have that, you obviously you don't have any independence. The MCC member, the tenure, the duration of these membership was very important, because you don't want these members to be elected every 2 years, because a prime minister or a president can keep changing them according to his own appointees. So there's no independency. Therefore, in almost all countries, the MCC equivalent, or the governor or the executive of central banks' terms of employment is at least 4 to 6 or 7 years. So they go over the political cycle, make sure that they are not affected by the prevailing government. So I recommend that in the case of Iran, that the MCC member should be appointed at least for 5 years, and the governor also should be at least for 5 years. And members should be recommended by the president, but ratified by the Majlis. Not the way we have it today, which is the president can hire and fire the governor. It should be ratified by the Majlis. And the study shows, by the way, that 75% of the governor had fixed terms of office that lasted for 5 or 6 years. Also, it shows that in more than 2/3 of central banks, 2 or more political bodies were involved in appointing the candidates. And also, about 80% of countries have revised their central banking laws since 1990s. A lot of, by the way, improvement has happened to the governance of central bank starting late, early 90s up to now. Bank Markazi independence should be prohibited, and I emphasize that it should be prohibited to lend to the government or its agency only unless under certain circumstances. Like, for instance, we could say that for working capitals, Bank Markazi can lend to 5% of your budget for last year, and that's it. Minimum level of lending. The goal of monetary policy for Bank Markazi at this juncture, as far as I'm concerned, should be price stability. That is the key that they are facing. Bank Markazi should also be accountable to the Majlis first, and obviously to judiciary branch if there are any wrongdoings or ethical issues there. And the last one for the Bank Markazi independence is something that we refer to as conflict resolution. We want to, I think they should stipulate an exception, exceptional cases where the government, and they're very, very special cases, can overrule Bank Markazi due to certain emergency. But even in that case, the government has to put it in writing with a copy to the both branches, legislative and judiciary system, the reason and the duration where that particular issue was overwritten by the government. So effectively, total independence, only under certain circumstances they can override, but again with a lot of ifs and buts. Also, the governor of central bank should appear at least twice in front of the Majlis and explains their policies. It should talk about the analysis of economic condition. It should give its forecast of key policy variables such as inflation and output. It should give the reason for their policy decision and any discussion of any contingency that they have in mind. And that report should be available to everybody. It should be published in domestic papers and magazines. I am of the opinion, by the way, in terms of the budget of the central bank, Bank Markazi, I believe their P&L, they have to be in charge of their own P&L. And whatever profit is gained by Bank Markazi should be kept at Bank Markazi, because this way you build up the capital of Bank Markazi and you give the signal to the market that I have enough capital to withstand any shock. I do not believe that at the end of the year any profit of Bank Markazi should go to the treasury. Some people are of that opinion. I am obviously with the former. And last is the transparency of Bank Markazi. And the way I would describe the transparency is along 4 or 5 attributes here. Number one, I want Bank Markazi to have political transparency, which means is Bank Markazi's mandate clearly communicated to the public at large. They should have economic transparency. Does the release of economic information by Bank Markazi enable people to make their own assessment? They should have procedural transparency. Does Bank Markazi provide written information on how it arrives at its policy decision? They should have policy transparency. Does the public have immediate access to detailed account of the thinking underlying the decision made by Bank Markazi? And finally, operational transparency. Does Bank Markazi assess the accuracy of its past forecasts and accounting for the past errors in the future? That is what I call transparency. No, naturally, we don't have that in Iran. This is the way they should devise their corporate governance. Inflation is one of the main issues in Iran. But let's look at what has happened to inflation in other countries, in the emerging market in the last 2 decades. In the last 2 decades, most of the emerging market, they have managed to bring down their inflation to single digit. And these are, I'm talking about 100%. I mean, Turkey's inflation rate in 1994 was 100%. They have established more independent monetary policy in most of these countries. They have broadened their financial institution. They have created more advanced, efficient capital market. They have increased the importance of the role of the central banks. These countries have enacted a lot of transparency law, accountability and responsibility. And they've opened up their economy to the rest of the world. And yet, Iran has not achieved not even one single of these items that I've just outlined for you. That shows how far behind we have become. Instead, we have high inflation. The numbers are obviously speaks for themselves. There's a lot of definition of what is a high inflation and low inflation, but basically low inflation is anywhere between 1 to 2%, maybe even up to 5%. Moderate inflation is 5 to 10% per annum. high inflation is 10 to 50%, and extremely high inflation could range anywhere between 50 to 100%. That is what we have, extremely high inflation in Iran. And these statistics by the Bank Markazi itself here shows all the numbers that I've just described. There is a discussion between some economists that we have a hyperinflation in Iran. And one economist from Johns Hopkins has stated that actually based on the black market foreign exchange, Iran's inflation rate is 200%, 150%, or way up. And another economist from Iran says, no, you're wrong. The inflation rate is 20%. And by the way, because Iran has foreign exchange, we're not like Zimbabwe to have hyperinflation. There's an element of truth in both of them, but I will tell, I'll only leave it at that. Even though we have foreign exchange in Iran, sooner or later we're going to run out of it. Today, as we speak, Iran's foreign exchange is $80 billion. $60 billion of that is blocked in Turkey, in China, in Korea. Only $20 billion we have access to. With that amount, it's very easy to get into the hyperinflation. So, but I don't want to get into that debate. What we have is definitely a very high inflation rate here. The inflation in Iran, because of that, has eroded savings, has inhibited growth. It has discouraged investments in domestic production. It has encouraged capital flight. It has increased demand for unproductive real estate investment. It has pushed up precious metals. It has made economic planning almost impossible. It has provoked occasional social unrest, and it has posed a form of regressive taxation that hits poor hardest in Iran right now. And what kind of inflation do we have in Iran? There are four types. One is we refer to as demand pull inflation. The other type is cost push inflation. The third one is structural inflation. And the last one is expectational inflation. And guess what? We have all of them. Again, we're number one in something. Iran has four of them, and here's the reason. Number one, we have excess liquidity that Mr. Ahmadinejad has created over the 8 years, has created a demand pull inflation in the country. That's a demand pull component. Number two, sanctions have caused the supply push inflation. So we have that one as well. Third, because of the chronic inflation, people don't have trust in the future inflation, and now we have inflationary expectation in Iran. So we have that one too. And last but not least, because of the consecutive and increasing fiscal deficits and government insistence on excessive monetary policy, we have also a structural inflation. So we have the four kinds of inflation that possibly could exist. We've managed to have that one. And what's been the government's response to that? Denial, denial, denial. Let's see what Mr. Ahmadinejad has said about inflation rate and exchange rate. And I quote, he said, "The currency upheaval is due to a conspiracy among private exchange dealers, sarrafis, opposition politicians, and hostile press." That's his reason for inflation that we have in Iran. Worse than that is the governor of central bank. Now, he is supposed to be the man who knows something about economics. Let's see what he has said about the inflation rate and all that. He said, and I quote, "It is a reflection of a mob mentality and the product of a defective exchange market where hoarders, smugglers, and soulless speculators are trying to create a false demand for dollars as a venue for investment." This is the statement by our respectable governor. Can you imagine like Bernanke or other governors say something like that? I mean, so that's the denial part of it. The reason why we have the denial, it's very easy. As I said, monetary policy are two types. One is that on the right-hand side, there are market-based. You use market mechanism to do the monetary policy, like open market operation. The other one, which is called credit direct, is basically you tell the banks and everybody else what to do. There's no market-based solution there, and that's what we have right now. Because in Iran, the only monetary policy we have is that the central bank tells the banks what the deposit rate should be, what the expected rate of return should be, and who you should lend to. That is our monetary policy. So, as a result, what are the obstacles in formulating effective monetary policy in Iran? By now it should be obvious. Obstacle number one, a dysfunctional bank markazi. Number two, government dominance of monetary policy. On the economy, we have a two-tier economy. As a matter of fact, by some estimate, 30% of our economy in Iran is in gray market area. We have out-of-control deficits. It's driven by oil revenue. We have pervasive corruption. In terms of our financial system, obstacles on that are many. We have illiquid, as a matter of fact, non-existing money market. We have a very rudimentary capital market, the stock market and the bond market. There's no accounting standard. There's no disclosure. There is limited monetization of the economy, and last but not least, difficulties in complying with Sharia law. And I'll explain that to you, what I mean by that, because that's a heated discussion here. To prove what I just said, there are a number of, again, studies that have just come out, and they have ranked Iran. One report just came out last month by World Economic Forum in September 2013 showed Iran standing among 148 countries. In terms of macroeconomic environment, we were number 100 out of 148. In terms of financial market development, we were number 130 out of 148. Business sophistication, 104. Labor market efficiency, 145. Institution, 83. Basically, we have below average in all of these the indexes. The one that's interesting is this one. This just came out 2 days ago by Rubini Global Economic Consulting. And I've given you the Iran's number in red. He has compared Iran's scores with the MENA region, Middle East, North Africa region, like Algeria, Egypt, Iraq, Jordan, Libya, Saudi Arabia, Turkey. Look at number, and any number below 6 is becoming a little bit dangerous. Below 5 is really bad, okay? Look at number 1, monetary policy. Iran gets a score of 0. I don't think anybody so far in any country has managed to get a 0, so they should get a prize for that. So 0 in terms of the score we got in monetary policy. In terms of fiscal deficit, we got 3.1. Again, remember, below 5 is really bad. Total indebtedness, we ranked pretty high. That means we're in good shape. You know why? Because nobody lent to us. No foreign there's no foreign debt because nobody lent to us. Iran's foreign debt, I think, is about $15 to $20 billion, which is nothing. Banking sector score, we get 3.4. Government effectiveness, 2.1. Rule of law, 2.0. Political risk, 3.6. Business environment, 3.2. All of them below crisis. And Iran basically has the lowest score amongst all the MENA region. And this is for a country that has aspiration to be a political force in that region. I talked about what the problem with the Sharia law. I don't want to get into this whole concept of, there's a whole debate about what is riba versus what is interest rates. I think, a total misunderstanding because interest rates is effectively a marginal rate of return. Let me give you an example. If you're building something, you have physical capital, financial capital, and then human being, basically. So the money that you give to the workers, if you like, is equivalent to marginal rate of return of the worker's contribution. If you have land that you're putting in the business, the rent you give to land is the marginal rate of return that land provides you. If you have financial capital you put in, the rate that you give to that financial asset is the marginal rate of return that you get to that. That interest rate component is different than riba. Riba, if you read the four main ayah, I forgot the four ayahs as a matter of fact, Al-Umran, Al-Rum, Al-Nisa, all of that talks about riba, which is a different subject, a different notion than interest rates. Anyway, here's the problem that even if everything else was fine, there's definitely a structural problem why you cannot have a banking system. See, banks borrow short term to lend long. That's why we call them maturity transformation. You leave deposit short term, bank takes the money and gives the lends long term. In order to do that, banks should be able to go to the market all the time in the money market to finance its short-term debt all the time. So in a conventional banking, there are millions and billions of daily trade amongst the bank to manage this shortfall. Well, in the Sharia Islamic banking, we don't have any money market. Absolutely nothing. There is something close to what's called sukuk, which is Islamic bond, but that is nowhere close to a liquid money market. So if you don't have a money market to manage your bank, there are only two ways to manage your bank. Number one, you only lend short terms because you have short-term deposits, or you lend long term and you pray that not too many people come to your bank at the same time. So there's a major flaw. And this is, by the way, a problem in most other Islamic bankings in the neighboring. So that is an issue also for Iran in terms of the monetary policy. And the reason why I say that, basically in a typical advanced market, you go from short-term funding to medium-term funding, long-term, and into indefinite. This short-term funding, we call it money market, like bank loans, certificate deposit, commercial paper. If you want to borrow medium-term, you go to bank loan, you medium-term notes. Long-term, you borrow long-term bonds. And indefinite is basically equity market. If you have all of that lined up, then we have what's called a yield curve. And when you have a yield curve, that means you have information enough to price any security with any maturity. And the business has access to all of them. Well, in Iran, we definitely don't have money market. We definitely don't have medium-term notes. We definitely have no long-term funding either. We have a fairly rudimentary equity market. So there is no money market. There is no capital market in Iran. And therefore, how can an industry or businesses prosper? So if you look at Bank Markaz's achievement, if you go to their websites, they say that our objective is to maintain the value of national currency, keeping inflation low, maintaining equilibrium, facilitating trades, all of this. And when you look at it, the results have been no, 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 no. You have not achieved any one of them. All you have done, you've managed to get the inflation rate way up, get the exchange rate way down, and the interest rates have its own, up and down, has nothing to do with the rest of the market. This is Karname Bank Markazi, and it should not be surprising to us. I talked about the causes of the chronic inflation. I want to tell you about one program which is actually very illuminating. Some of you may have heard about these targeted subsidies. These are Yaranay Hadafman. Basically, 2-3 years ago, Mr. Ahmadinejad announced that by increasing the prices of oil and bring it to the international level, I will have enough money to give people cash and have some left over for government, and also some more to give to the industry because the price of oil has gone up. So the idea was lift the price of oil and other services and have enough cash to give everybody 45,000 tuman per head in every family, and give some money to government and give some to industry as well. Okay? Now, look what happened. The general budget for the year 1391 was 66 billion tuman. Only 38% of it was financed from raising of oil prices. And the rest came from the government, and this is how it happened. So this is what the money was supposed to go, as I said. 50% of the money was supposed to go to subsidized program, i.e. giving people money, and 30% to government and 20% to industry. Instead, they underestimated the cost by only a factor of 3 times. So not only they couldn't give any money to government and industry, they gave all that money to the people, 45,000 to 1 per month, and on top of that, they had to go borrow more money. This is one of the, and what happened at the end? A lot of liquidity in the market, inflation. But worse than that, these programs make people always their hand out to the government. That culture is horrible. Instead of making them capable to do something. Can you imagine, they spent so far about $35 billion on this program. Can you imagine if you had spent $35 billion building schools and vocational schools to make people capable instead of this nonsense? So this is one of his projects. And result was inflation. And again, on their website, they said, we're doing this because of the following goals: promoting standard of living, helping domestic production, distributing the national wealth, minimizing income disparity, raising energy prices to international level, increasing efficiency, reducing field, blah, 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 blah. And look at the result. None of them were achieved. Only one, even that, to somewhat, because they managed to increase the price of oil a little bit. But none of those goals were achieved. It takes a lot of, again, ingenuity to become such a failure. So, subsidy, it was a bad idea, bad execution. It encourages the policy of handouts, consumption versus investments, no contribution to the society, and obviously the opportunity cost is pretty high, effectively. The other one that Mr. Ahmadinejad started was the project with quick returns. Here's what happened. These are the money that they were giving out to people because they were going to make money very quickly. That's called the quick return project. So the government, as usual, told the commercial banks to lend to these projects, and the commercial bank can go to the bank market to get their money. So the commercial bank ended up lending about, depending on what exchange rate you use, $20 to $40 billion to these projects so far. And here's the result. Only 6% of the so-called these projects have been profitable enough to pay back their money. 6%. Out of the $40, $50 billion they've lent out. And God knows who they have lent it to their friends and family and the usual crowd. Let me just jump ahead in a couple of, on the inflation targeting. I want to get to, okay. Inflation targeting, basically an idea that I think most central banks follow, and they pick a rate, either a range or a band, and they obviously implement their policy to get to that point. Iran should follow the same thing, but currently as we speak, the organization in Iran is not conducive to do that because of ineffective monetary policy tools, fiscal dominance, and suitable governance structure of Bank Markazi, because they're not independent, they don't have any experience, they're not tenured, and the compliance with Sharia law. The studies have shown, by the way, that any country with a chronic inflation of 3 to 5 years in the range of 20 to 25%, i.e. something like Iran, is considered incapable of using monetary policy to bring about a lasting and low inflation. So Iran, by using monetary policy, cannot reduce its inflation. It requires a lot more than that, effectively. Now, assuming, as I said, assuming these shortcomings of Bank Markazi all resolved and ratified, here are a few suggestions for how you should implement inflation targeting. Number one, they should announce an explicit quantitative medium-term inflation target. Number two, they have to state unambiguous institutional commitment that price stability is the primary goal of monetary policy, and that takes precedent over all the other objectives. Number three, they have to state the goal of the bank in the following order: price stability first, financial stability second, growth third. Number four, they need to develop a model for producing inflationary forecasts. This is very important. If you look at all the Latin American countries, they have some of the best modeling in terms of forecasting that we could use, as a matter of fact. They need to obviously increase the transparency of the central bank, Bank Markazi, and obviously the accountability that goes with it. The inflation targeting also should be the sole responsibility of MCC. And the government, the Majlis, can concur with that target, but the government should not have any say in terms of the level or the voting in that sense. The number of, as I said, the number of MCC should be 5 to 7 people if you are going to implement this inflation target. And also, the members should have the highest integrity, independent mind, and substantial experience in monetary and economic issues. Finally, the discussion of foreign exchange is a whole new subject that hopefully Andishgah will have one. I will only leave with one sentence here, that if we are going to follow inflation target in Iran, the best FX system that we can employ at this time, at this juncture, is to follow a managed floating rate regime. Because you can have a whole array of these things, from floating to intermediate to fixed, and there's a whole combination of permutation of different exchange rate regime. But for the inflation targeting, take my word for the time being that the managed floating rate is the best. I also want to leave you with a framework for how we can analyze the financial health of Iran, or for that matter, Bank Markazi. The way you can look at it is that, look at let's say in this case, the government. They have assets and they have liabilities. On the liability, the one that's very obvious is the gross debt. That's the total amount of debt that the country owes, and that's why I say it's the outstanding. You can look up the number, it says 5 billion, 10 billion. But more importantly, there's a lot of what I call social liabilities. These are the future liabilities that a government accepts to provide its society. In the case of Iran right now, as we speak, there are expenditure associated with the Maskan-e-Mehr, targeted subsidiaries, public pension funds. These are all future obligations that one has to take into account, because that is a liability. So we have gross debt and outstanding, and here is the social liability. And on the top, I will come back to do this, the government equity. Now, on the asset side, you also have certain power. These power could be power to tax. The government can tax in a country. And also the government has some real assets, oil and minerals, equity holdings in assets, or other financial assets. So if you look at it in totality, they have some assets that are outstanding, and then there are some assets that are relating to the future earnings of that country. At the same time, on the liability side, you have gross debt, which we can measure it immediately, but they also have social liability, which has the future obligation. If these numbers add up, and if anything is left over, then you have an equity, just like any company. If your liability is higher than assets, you have negative equity, i.e. you are effectively insolvent or bankrupt in this case. So, and if you are insolvent, who pays for the government's insolvency? It's you and I, citizens, taxpayers. Public services will go down. Bondholders will be hurt because there's default on there. There's repression, there's negative real rates of return, currency devaluation, and so forth and so on. So it's important to look at the totality of a government's obligation in terms of what it owes now and what it owes in future to find out whether this government has a financial standing or not. And last, is there hope for us? It's a question that I thought a lot about it, but let me put it to you in a couple of slides. Number one, yesterday, the head of the, I think Bank Markezi, I think he's in Washington, he said that the central bank's main priority is to reduce inflation and money supply even as the economy is struggling with a recession. He then went out and added that we are now facing a stagflation, hoorah. Expansionary monetary and fiscal policy will not help the growth. They all sound fine to me. And the government has agreed to separate monetary and fiscal policies that will allow the central bank to focus on controlling liquidity and bringing down inflation, which is what I've been saying all along. So the gentleman is saying the right thing. But here's the catch. If you go back to my first slide, I said we have three spheres: social, political, economic. If you do not solve your political problem with the West, if you don't resolve the governance structure of Bank Markezi, none of the monetary policy that this gentleman talked about is useful at all. So if there is any hope, it has to go from the political sphere, and if that is taken care of, then you go to the institutional reform, and once that is in place, then we can talk about monetary policy in Iran. So what to do? The way to do this is basically, first and foremost, replace populism with rationalism. Populist policies have no place in rational economic policy making. Every case in developing countries has shown that empty or full of cash, in case of us, empty populist policies not only fail to deliver on their promises, but bring hardship to people that takes years to correct. 2, policymakers must be guided by the accepted and proven laws of economics which have enhanced the lives of billions of people over the past 4 centuries. Don't deny that, Mr. Ahmadinejad. 3, most importantly, let only rationalism based on factual confirmation guide policy making. And 4th, create the economy that rewards entrepreneurs and businesses for taking risks and producing the successes that will, in aggregate, allow Iran to take its place in the global marketplace commensurate with its history, its culture, and the education, talent, and creativity of its people. And let me finish with one metaphor, as metaphor is part of our culture. Does Iran have the instrument to be a successful nation? Yes, Iran has all of the instruments of a successful economy. A young and highly educated population, vast and diversified natural resources, and a unique geographical position. But, here's the but, to turn these into a cohesive, dramatic success, Iran needs a maestro as its conductor, a superb team of players working together in harmony, and a cohesive, dramatic score with the orchestra playing in tune. Thank you so much for your time.
Thank you, Dr. Abtahi.
Take question?
We'll take some questions, and I don't have a microphone, so if you can speak loudly, and if you can relay the question because of your microphone.
All right. First question.
You may want to repeat the question. Okay, I'll try to repeat the question as well. Yeah. Okay.
We start from the back.
I'm sorry, has there been anything good in Iran in 30 years?
In terms of monetary policy?
No, economic issue.
Has there
been anything good in Iran in the last 30 years, overall economic?
Well, I mean, if you cast your net so high, yes, I can say there's been a lot of roads that were built in villages. But remember, Basij initially did a lot of that work. But then I ran into difficulty. I don't know. I don't know when you say something good in economics because I only can compare with the output. Let me give you an example. Today, there's a tremendous volume of trade between the Persian Gulf all the way to Asia, and they call that the new Silk Road. It's a huge volume of business. Iran does not play one iota of role in that because it doesn't have an industry. 70% of Iran's companies are bankrupt. An employment rate of 5 million, an additional 5 million students are coming in, like 10 million the next few years. So 10 million jobs that's supposed to be there. And during Mr. Ahmadinejad, you know, every year he only created 14,000 jobs. 14,000 jobs versus 10 million. So I can scratch my brain. I don't know right off the top of my head to say if we have been successful in any particular industry. Maybe in pistachio, maybe in rugs. I don't know. But if you're talking about industry per se, I can say no. We've not been successful in any industry because we don't see Iranian company competing. Look, right now, countries like United Arab Emirates, Saudi Arabia, Turkey, they have companies that they compete globally. Show me one Iranian company that compete locally, I mean regionally. So if I go by the outputs, by the results, the answer is really no. And I say that with really bad feeling, but the reality is that because it's been driven by ideology, populism, not economics planning, not the rationalism that I was talking about. But do you know if we've done anything well in the last 30 years? Please.
No, I look at CIA.gov. It says 40. CIA.gov.
Right.
It says 40% of Iranian GDP is industrial.
Right.
I don't know how true that is.
Well, let's say it's true. It's industrial, but what they produce is a bunch of crap. They sell it to the Iranian people. It doesn't mean anything. It could be 60%, it could be 70% industry, but they sell it. What is the quality of that product?
Gentlemen in the back over here. Yes.
Well, thank you for your presentation. As I listened to you, I got the impression that you're placing disproportionate downside of the Iran's economic ills on Ahmadinejad's government. If you look at all the problems that you pointed out correctly, that Iran suffers from, the issue of reliability of a single commodity, the government appropriating all the income for oil, lack of proper governance, high inflation rates. These have been endemic to the Iranian economy in the past 45 years. Particularly if you go back to the mid-70s under the Shah. Started with that. I'm not trying to defend Ahmadinejad's government. I think he's been horrible. He has done tremendous damage to the Iranian economy. But to address the problems of Iran, it's very important that you put its problems in historical perspective. And it does not start with Ahmadinejad. It goes way back to the 70s, which has some social element. Now, having said that, I agree with most of your conclusions about what should be done. But I do take an issue with your definition of the priorities for Iranian economic policy,
Right.
which is price stability, financial stability, and growth. As I listen to that, it sounds like I'm listening to someone from Enterprise Institute.
Enterprise Institute.
Making a recommendation on American economic policy. Iran is a less developed country.
Right.
You cannot have financial stability, price stability, and growth specifically as the target. there are a lot of people who are impoverished. So social policy that pays attention to the welfare of those individuals is of primary importance.
Right.
So while you pay attention to all the criteria that you pointed out, it's very important that you protect the poor. We are not in a rational expectation economy like in the U.S., which even there has failed.
Right.
You know, what we call rational economic
Right.
policies, a lot of times are not rational for people who cannot participate in the market.
Right.
So it's very important that we protect those people. And it seems like your recommendation, which was summarized under these three objectives, kind of contradicted the definition of development that you gave at the beginning, which is development is not per capita income only.
Right.
Development is a balanced growth
Right.
in individuals, in their social standing, in their aspirations, in their
Right.
social mobility, as well as economic status.
Yeah. So I've said that. Let me answer your question in a couple of ways. Number one, you're right to say that Iran has had problem with inflation going way back. As a matter of fact, the only period in the last 40 or 50 years that Iran has success with the inflation rate was in the decades of 1340s, i.e. the 1960s. Because from 1351, 52, when the oil price came in, the inflation started creeping into Iran's economy all the way to today. So if you want to look at a golden period where there was no inflation and the growth rate was fine and everything else, I would call that the decade of 1340s. Number two, I'm not against of all the other economic development issues that we need to do, but I will ask you one question. When I say inflation, who gets hardest hit by inflation? It's the poor. So by addressing inflation as target number one, I am for the poor. Otherwise, I would say, okay, let's have growth. Well, how do you have growth? You have to have sort of expansionary policy. If you have expansionary policy and there's no productivity, you're going to add inflation to it. You're absolutely right that we need to take into account all of those economic development issues. But to use an effective tools to get to those goals, I say that go through the inflation channel to get there. You were saying maybe if I go through an employment-based solution, or I'm just saying that.
Let me clarify. I agree with you that it should be the primary objective.
Right.
But there are other things you also need to pay attention to,
Right.
such as potentially subsidy to those classes that cannot afford the basic human needs.
Absolutely. I am absolutely for subsidizing people. Let me give you an example. I am again. I think the foreign exchange should be one foreign exchange rate, taknahi. And if we want to help the industries such as pharmaceutical and other essential goods, don't give them preferential foreign exchange rate. Give those industries subsidies directly, not through the foreign exchange. You see, that's what I'm heading at. But yes, I mean, at the end of the day, as I said at the beginning, there is absolutely no development if you don't have freedom. That is to me, it's obvious. But you're absolutely right that Iran's problem is not only during the Ahmadinejad. I just picked on him because I couldn't go through the whole history of it. But more importantly, he's managed to really screw up the economy badly. I mean, compared to the others. Excuse me. But you're right. I mean, we have had chronic inflation problem from the beginning of the war and prior to revolution in Iran, especially in the 70s.
Thank you.
Yes, here. Saifi.
First of all, congratulations on your establishment. It's really good and great. Second of all, I was wondering if you, as you mentioned about the banking market, are they going to be bankrupt? Is it a possibility to go out of business, or they don't have any such organization anymore?
Yeah.
Because they failed all the criteria that they are supposed to reach.
Right.
They failed.
Right.
The second question is, how about the banking market? Is, as gentleman mentioned, the previous performance shortly. They had a lot of money. They have access to a lot of tools. Did they succeed?
Okay. Let me answer the second first. As you know, Bank Markazi was established in 1961, 1339, I believe, in Persian equivalent. They have had two, I would say, the golden era of Bank Markazi, again, I go back, it's in 1340s, where you had the best mind of the time running Bank Markazi, people like Mehdi Sami'i, Hassan Ali Mehran, Farman Farmoyan. These guys were absolutely at the highest level. There was actually there's a period of, I think, 2 years that you had three top people running three organizations. Safiya Asfiyar was running the planning and budget organization, Sazman Barname. Ali Khani was running Ministry of Economy, and Mehdi Sami was running Bank Markazi. And you know these three are the most important entity in Iran. These three people, excellent mudir, excellent qualification, and they work as a team, and that's why we had the growth and the success in 1340s. Unfortunately, things changed in 1351, 1352. As the oil money came in, Shah didn't believe anymore in all the advices that he received. As a matter of fact, there's a famous conference in Ramsar that they were presenting to him the fifth plan, fifth plan, and they had three scenarios, slow growth, medium growth, high growth. And all of his advisors have told him, Your Highness, Your Excellency, whatever, that let's go for the second at best. And he basically walked out and said, if you don't do that, I'm going to cancel. Actually, he was going to totally abolish Sazman Barname. And it was only Alam, according to the history, that prevented him to do that. When that happened, Bank Markazi's independence went out of the door, inflation came in, unfortunately. So they had successes during part of the 1340s, but the failure, I would say, in the last 7 years of Shah. Your second? Oh yeah, the question is that can a central bank go bankrupt? I mean, that's a general question. I get back to the specific one you're asking. The central bank in general, because first of all, because they can print money, effectively they cannot go bankrupt. They will only go bankrupt if they have foreign exchange debt and they cannot honor it. In the case, the recent example was the Central Bank of Iceland. In this debacle post-2008 crisis, as you know, Iceland has substantial foreign exchange debt, both its banking system and the central bank itself. So they effectively declared central bank bankruptcy, and the way they handled that situation was the other central bank provided them with what's called swap lines or the extension, and effectively restructured the Icelandic central bank. So the answer is yes, if you have foreign exchange debt, and no, if all your debt is local, in local currency, no, you cannot go officially bankrupt.
Gentleman back.
In Ahmadinejad decided making policy that he gives subsidy to the poor, made them to stop working. He also managed to make like 80% of the workforce into brokers, into landlords. Anybody talk to in Iran these days, somehow either is in bribery or landlord business rather than producing. So your comment about Mr. Ahmadinejad is really proper.
Okay, thank you.
Without trying to be devil advocate, don't you think some of the problems which you have right now is the result of the sanctions and the policies which they have right now, the short-term policies to fight these sanctions? And do we have to give up to any demand which quote-unquote West has these days to take care of the problem?
Well, if you recall, the question was that all our problems are effectively short-term problems are due sanction. The answer to that is no. As I said, for instance, in the discussion of inflation, we had 4 types of inflation: demand pull, supply push, structural, and sanction. Sanction was only one element of the inflation. The others were homemade in Iran, effectively. And then the next level of question you should ask yourself, why do we have to have a sanction? It goes back to effectively our stance on nuclear issue. If there was not a stance on that, they won't have any sanction.
So we have to give up on what we have right now because the West want it and so
Oh, no, I'm not saying that. I would say we don't have to give up. I think the government has to go, hopefully next week in Geneva, based on the national interest of Iranian people, negotiate a nuclear treaty with the West. Based on the national interest of the Iranian people with the West. If they do that, I'm sure they can come to some sort of an understanding. And in that sense, I think the problem can go away. But also, let me tell you, these sanctions, by the way, they're not going to go away immediately. There are not the different ways of sanction that we have in Iran. They have sanction that was imposed by Obama himself. There's sanctions that's imposed by the Congress. There's sanctions by the United Nations. There's sanctions by the European. Like the one that's imposed by the Congress, it will take time. Even if tomorrow says, I will not do anything in the nuclear, it takes time. So hopefully, as I said, they will come to some kind of an arrangement, but the expectation should be these sanctions. It's going to take 2-3 years to gradually to be lifted. So let's not get our hope high. But as I said, Iranians' problem is really in the political arena. We have the issue is in the economic, but you need a booster, as they say, in the political arena in order to then help the economy moving. And the way you get that booster is hopefully to come to terms with the West on the nuclear issue.
We take one more question, and then we're going to have refreshments and hors d'oeuvres afterwards, so you can continue the conversation. But go ahead.
Dr. Abtahi, thank you very much for a fine, very nice presentation.
Sure, thank you.
The question that I have, you listed 5 items for reforming the central bank, beginning first with the independence of the central bank, which is an essential part. I keep thinking about those, and obviously, if they're achievable in Iran, the central bank of Iran would be very similar to the Fed, which is the American central bank, the model for proper central banking around the world. Do you think that given the structure of the government, starting from the top, the Constitution, all the way down to the policies that are implemented from day to day in the country, is any such thing at all achievable, sanctions or not?
It's a good question. I don't think we are going to get all the 21st century model central bank tomorrow, but you can implement a couple of them immediately. Number one is the transparency. I know the issue of independence is going to be a big heated topic in Iran, but even though it's the most important one, but the issue of transparency, number one, and announcing the goals and standing by it is the thing they can do tomorrow, irrespective of all the other issues that they have right now. This is essential. The issue of independency, I think there should be a discussion at the parliament to talk about it, what it requires, what it entails, and everybody agrees on that. Once everybody signs off on that, then there are different measures of independency, i.e. goal independency or instrument independency. At least, I think Bank Markezi should have instrument independency. On top of that, the most important one is that Iran has to deal with its Islamic banking one way or the other if it's going to have a monetary policy effective. If it isn't, then there are structural issues with unless I misunderstand the Islamic banking, which I doubt it because I know a little bit about it, those are impediments because you don't have any money market. There's no money market in Islamic banking. If you don't have money market, you can't have a monetary policy. And it's sad because, as you know, although in Iran right now we talk about different uqud, مشارکت, مضاربه, مشارکت, نمیدونم, Bain al-Ainain, all the other type of contract that we have right now, that they're supposedly lending on that basis. Well, why not Central Bank of Iran come out and say, okay, we are Islamic banks and the portfolio of the banks are according to these different uquds that we have done. Here are the ones according to ijare, here's the one according to musharakat, this is muzara'eh. So at least we know, even in the Islamic banking, what is the breakdown of all these activities? We don't. De facto, they're all interest rate based. You know, they call it provisional rates. Give me one example where the final interest rate was different than the provisional rate. So that's an interest rate. But anyway.
Thank you. I'd like to make one last announcement that we're going to be having a 18-month study here in Andishgah on Iran's economy and role of monetary policy in central bank, headed by Dr. Abtahi. And we're going to have our first panel in the winter of 2014 that's sponsored by Omid for Iran organization. We're very happy to be partnered with them and for their sponsorship. And I wanted to again thank Dr. Abtahi for a wonderful presentation and for a wonderful point.
Thank you. Thank you.